The following is a presentation of TFNN. Live at TFNN, The Money Masters. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, The Money Masters.
Good day, Money Masters and Treasure Hunters. Welcome to the March 26th, wonderful Wednesday edition of the Money Masters Show. I'm your host, Steve Rhodes, and I am grateful for your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with the tools that empower human potential. Because living up to our potential, folks, that's something you and we must master each and every day. So let's begin our day with empowering beliefs, my favorite of all, because it encapsulates the reasons why we do the things that we do. And then if you want to change the way that you do things, well, that means that you've got to become an electrician. And I say become the electrician of your own beliefs. And the reason is because beliefs, they've got the power to create, and of course, that means they've got the power to destroy. Only you and we are the ones that have that incredible, extraordinary, awesome ability to take any experience of our lives and create a meaning that disempowers us. That's going to stop us from taking action, or one that can literally just simply save our lives or empower us and propel us and take us to places most likely that we never even dreamed of. Think about it like this. There's only one thing that you can control in life. Only one thing. If you get this, man, you are so powerful. And that's just simply the meaning that we give to something. It's our choice as to whether we want to see the glass half full or half empty. It's only our choice. That's the beauty of the markets we trade. There are folks out there that are bulls, and there are folks out there that are bulls. One sees an event as a selling opportunity, another as a buying opportunity. You see, it's our beliefs, the meaning that we give to events, statements, criticisms, whatever it might be. We are the ones in control of that meaning. And I consider that to be the most incredible, extraordinary power. Pretty cool when you really think about it. Because what you and I can or cannot do, what we consider possible or impossible, it truly is rarely a function of our true capabilities. We see that all the time. You see people who've got less, who would be in such struggles out there, yet they can overcome so much. That means that what we consider possible or impossible just simply means I am possible. That's all that word really means out there. So it's rarely a function of our true capability. It's more likely a function of our beliefs about who we are. And why does that matter? Because all breakthroughs begin with a change in beliefs. And the way that we change is that, or at least the most effective way that I've learned that we can change, is just simply to associate massive pain. I mean massive pain with an old disempowering belief. You've got to believe at your deepest level that belief has cost you in your past. Well, that's a no-brainer. And it will continue to cost you in the present. That likely is a no-brainer as well. You see, the key is to look in the mirror, to close your eyes and look in the mirror, if you can do that, because you can reflect that back to you and say to yourself, if you continue with that for the next year, where's that going to lead you? If you do that for the next 5 years, where's that going to lead you? Yes, you need to see pain into the future. That's what's called the Charles Dickens process. And that's why knowing what you don't want is just as important as knowing what you do want. Because what we need to do is rid ourselves of any disempowering beliefs. We must associate tremendous pleasure to the idea of adopting a new empowering belief. That means we've got to take the old one, we've got to package it up, go ahead and ship it out FedEx overnight to someplace that give it to one of we can't give it to our space shuttle. You got to send it over to, you got to ask Vladimir Putin to take it up on his ships up to space. But go ahead and ask him anyways, because you want to get rid of it, and then you want to replace that box, that empty area, with those empowering beliefs, who it is that you want to become. The reason I say that is because we're always trying to become more, no matter who it is, no matter who we are, no matter what level we've attained. So therefore, we've got to know that at any moment, a decision that we make can and will likely will change the course of our life. And for most, it could change it forever. Could be the next person you stand behind in line of. Maybe while you're standing in line, getting some food. Say hello to the person behind you. Maybe the person in front of you. Could be the person you sit next to on an airplane, on a boat, on a train. Could be anywhere. Could be the next phone call you take. How about the next phone call you make? the next movie you see, the next book you read, the page you turn, the next newsletter that you subscribe to, any one of these things could be the one single thing that causes your floodgates to open. And then all of the things that we've been waiting for, they will fall into place, folks. Yes, I say become the electrician of your beliefs. If you can get that, if you can go back and understand that, this is a lesson that you want to be able to teach to all of those friends and family. You want to make sure that you teach this to your kids out there. Because oftentimes, what I've learned, what I've observed, what I've seen, this doesn't just apply to me and my kids. I've attended so many workshops out there and witnessed it and watched it happen out there. Is usually the things that hold people back is some BS, that's before Steve, some BS interpretation of some event that happened in their life. And usually it happens because they blame it on their parents. So tell them not to blame anything on us, because everything that they've learned, they've done between the ages of 1 through 8 out there. And I can guarantee you that there are some misinterpretations along the way out there. In any event, you don't want to hear about that. Although I love to speak about that stuff, I could talk about it for hours and hours and hours. You probably tuned in, well, maybe to hear a little bit of that, but certainly what's going on with the market. So right now, we've got the Dow trading up 69 points. It's traded out at 16,436. S&P up 8.5 points. It's traded at 1874. Composite up 21. Trading at 42.54. Russell 2000. It's the struggler out there. It's only up $2.70 right now. It's trading out at $11.80. To the upside here, we've got Google taking charge here. Regeneron Pharmaceuticals. Google's up $8.88. Regeneron Pharmaceuticals up $8.01. Priceline up $8 and change. PVH. Nice looking move here today. That's up $6.78, 5 below. We'll take a look at that. That's up 15% here this morning. Laboratory Corp, LH up $5. Lindsay Corp up $5. LinkedIn up $4. Ralph Lauren up $4 right now. Clovis Oncology up $4.40. The downside, the real struggle out here, you folks aren't eating enough bread, or Panera bread, I should say, or maybe you're not eating enough Bear Claws out there. Those Bear Claws, they're pretty darn good, aren't they? They are if you like almond and maybe a little bit of cinnamon topping out there. Apparently they're not selling enough of them because they are trading down $11 and change right now. They're off 6%. Essex Property, ESS is a ticker symbol. They're down about $4, 2.5%. Amazon off $2.45. Eagle Materials, EXP, is the ticker symbol. It doesn't have I guess it's ESP, right? EXP, it's trading down $2.44 out there. Franciscus Holdings out here, down $2, trading out at $18.57. Our call number is 877-927-6648. Hey, we've seen the S&P, try to reach for the highs, and each time it gets thwarted. Thwarted, that's a good word, isn't it? Why is it getting thwarted? Or what is the resistance level that it's got to break through? Well, if you're watching us on Tiger TV, you're taking a look at a little rising price channel in the S&P futures contract. This takes us back into the old time frame, at least at the lows. Takes us back into about the 7:30 time frame in the evening on March the 16th. And you can see a black diagonal line to the upside here. You can see that also was, the highs were running into that level. Well, look, the ES Mini broke through it with a vengeance. It did that on the trading session here at 10:30 in the morning. That was on March the 24th. Breaks lower, completes an A to B equals CD to the downside, I believe. Let's take a look at the A to B equals CD that it was forming, that it was completing. Completes a 1-to-1. A to B equals CD to the downside. Gets down to a projection there was 1844. Gets down to a low of 1841.25. Now, it's trying to make an A to B equals CD to the upside. What does that look like? Well, what that looks like is starting off at that low that came in at 1 o'clock in the afternoon, down at 1841.25. Your B point on this is going to be the 10:30 session on March 25th. Price level there, 1864.50. C point was a retracement. Looks like probably about a 0.68 retracement. That was down at 12:30. That was yesterday. That was at the level of 1848. 1-to-1 will take it to 1871. Look, when you break a diagonal channel line, that's in this case here, that's what the ES Mini did. What the universe is saying, what price is saying is, hey, this may be a real break to the downside. And if it is, every time price tries to get into it, it's saying, how certain are you that you want to resume your trend to the upside? I want to see some conviction in it. We'll take a look at what happened even yesterday. Yesterday here, as we were at about 10:30 in the morning, this is a half-hour chart that we're looking at. Price got up there and got rejected and came back and made that 0.618 retracement. I think it was a 0.618 retracement. Let's actually go measure it. Was it a 0.618? Yeah. 0.618 retracement took it to 1850.13. Where did it actually get down to 1847.97? Is that within range? Yeah, definitely within range. Now, what price has done here this morning as we were coming on at 10 o'clock, price during that half-hour session between 9:30 and 10, price had punched up into the 1868.75, and guess what thwarted the continued move forward to complete at least the 1-to-1 A to B equals C the 1871 level. Yeah, that was the bottom of that rising price channel. So that is really going to be a key area on an intraday chart to watch, because if price gets back inside there, that would be very bullish. If it just continues to attempt to try to get into that level and fails, it says you've got this pretty significant resistance here. That's at the high at 10 o'clock in the morning from March 24th. 1866 is the number you're trading at, 1864.50 as we speak right now. Old resistance could be what? Could become new support out there. So that is what's going on the intraday charts, and that's why the S&P at this stage here is struggling. That's where the battle is. It's in that rising price channel. It trying to get back in because it wants to join the club out there. In the meantime, let's go take a look at gold and silver. Let's go see what we have going on out here. We didn't look at that during the first hour. My apologies. So let's go look at it now here, see if there's anything really going on. And the answer is no. So there was a reason really not to waste your time and look at it. Not that I'm going to waste your time now, but let's just take a look at what Goldilocks is doing. We were taking a look at what? Rising price channels inside of the S&P futures contract, right? We were looking at a 30-minute chart. Now what we have here is we've got a daily chart for Goldilocks, and Goldilocks also has its own rising price channel. And what did price do? Price came down into that bottom of that rising price channel, did it with a wide-ranging bar 2 trading sessions ago on March the 24th out there as it got down and closed at 1309. What did it do yesterday? Yeah. Not much. Well, to a certain extent, it stopped the descent, is what it did. No reversal signal, that is for sure. Nice little small-bodied candle. Actually, could be today, could be tomorrow. What you'd actually like to see here, today, if it just simply did nothing and just closed right around here, that would be cool. And then if tomorrow it took off topside, it would create one of those nice morning star reversal patterns. But right now, price is dancing right around the bottom of that trend, which is the rising price channel out there. Look, if price breaks through this area, where will it fall to? Well, we just simply use our retracement ruler, and that's going to give us our guideline as to where price would move. Right now, it's only a 0.382 retracement. If you're bullish on the metal, you're looking for price. You're looking for a reversal signal. You're looking for a reason to really get bullish here, and that is because you want to see all that the retracement would have done is come down and tested a support level, and if that only being the 0.382 retracement, that would be a muy grande bullish out there. Very big bullish pattern if it holds. Now, if it breaks a rising price channel, does that mean it's bearish? No. All it really means is that it wants to go down to the next floor out there, and the next floor would be 1262. That is your 0.618 retracement, and that is what Goldilocks is doing. We get back from this first break out here. We'll go take a look at Hi-Ho Silver. Maybe we'll even play the Hi-Ho Silver music theme just to get us in the mood. 877-927-6648. We'll be right back, folks.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow's up 39. S&P is up 4, trading out at 1869. This 1863 area inside the ES Mini. It is formidable resistance out there. I did mention I was waiting for that music in the background. LOL. Al, are you out there? Where's my Lone Ranger music? Oh, it's a beautiful thing, folks, isn't it? Hi-ho, silver! Let's go check it out right now. We've got silver trading out at $19.97. And, folks, if this is not a beautiful pattern out here, we're going to see if this is going to hold. If you're watching us on Tiger TV, what you're seeing is a nice .618 Gartley buy pattern out there. And Gartley buy pattern completing yesterday. Well, really completing perhaps the day before, but yesterday we saw a price low of $19.90. Now, why is that a beautiful pattern? Well, what we have here, folks, we've got a nice 1.618 expansion of that B to C swing point. That's what formed that D. Now, when I say D, you might be saying, hey, what the heck does that mean? Well, look, inside a Gartley buy or a sell pattern, you've got an A to B equals CD. In this case here, it's the A to B equals CD to the downside. You're taking a look at the high from February 24th. That becomes our A point. That's out at $22.18. Your B point of the A to B equals CD of the lightning bolt pattern. That takes you down to the low of $20.61. We see a .786 retracement. Why do we like that? Because you like seeing these Fibonacci numbers come together out here. So you got a .786 retracement, and that marks the C point. A to B equals CD. That makes a move down into this level here yesterday. at about the $19.90 range. When it does that, it forms an expansion. That means if we take a look at the B to C level, that means the low on the B point is $20.61. The high of that C point out here is $21.79. If you took that difference, you multiplied it times 1.618, and you subtracted it from the C point, it'll give you that price projection of the low that was put in yesterday, or very close to it. So now you've got all, and by the way, also if you come from our X point, that means the beginning of where we started all this, which was on December 31st, all the way to the high that was put in here on February 24th. You'll see that it was forming that point out there. It was making a 0.618 retracement. All Fibonacci numbers. This should be good support. Hey, if this now, does that mean you go ahead and you buy? No, of course it does not. Well, you could if you were trying to truly buy the bottom tick. I don't really think that you need to do that. Instead, I think you need to wait for some type of reversal signal. You do need to wait for the cavalry to rush in. Otherwise, you're going to be fighting that battle on your own. And unless you're really good with a six-shooter out here, you could end up taking a few bullets. No reason to take a few bullets. What you want to do is you want to wait for the cavalry. Well, what's the cavalry look like inside of a stock chart? It's a bullish reversal signal, and we do not have that. We do not have that yet. That means if this area fails here, we're going to have to retrench back to about the 1946 level. 1946, that becomes our 0.786 retracement level. We're going to say, so long, Leonardo Fibonacci, with all those great numbers. They looked nice, but that's all that they did was they looked nice, or maybe it was a reason why price just simply stalled here at the moment. And if price can get down to the 0.786 level, why not go back and all the way down to the December 31st area or the bottom of that consolidation box? And that is a potential out there. So that's what we want to be watching for inside of silver, but it's got beautiful patterns. If ever you were to draw a Gartley pattern, you'd love to see it like this, with all Fibonacci numbers showing up here at measuring each of the expansions and contractions of all the important swing points out there. Now, you wouldn't exactly put it, well, you'd put this in the textbook no matter what, because I can tell you what we're looking for from a successful pattern, and then we can also know what's going to happen if it fails out there. And that helps. Why? That helps because if, in fact, you are long and you see it close below the 1990 area, chances are you are wrong on the trade out there. That's what's going on in silver. Let's go take a look at light sweet crude. Let's go see what it is doing. Of course, I have to find the tab that's got light sweet crude. Right now, light sweet crude is trading up about 80 cents, 88 cents, 89 cents out at 100.07. This is the daily chart. Really just been consolidating sideways out here, trading into, maybe it's going to make a run here for the top of the March 20th level, which is 100.82. I still contend that if the world powers, the G7, so to speak, if they want to put some hurt on Vladimir out here, all that they need to do is go ahead and push prices lower inside the light sweet crude complex out here. At this stage, we've just seen a fairly stable market with prices moving sideways. Now, the pattern that is set up here is the potential for an A to B equals CD down. And if we, in fact, see that take place, and we'll know that that would take place, if we see it close below the B point out here, that would be your low from March 17th, 97.37. If we see that, we're probably looking at about $85 oil out here. But right now, we don't have that pattern in play just yet. 877-927-6648. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow up 39, S&P up 5, Composite up 8. Let's go check in. Let's go pull up the Rhodes Momentum Indicator signals out here. Let's start scanning the indexes, see what it is that we have going on here. Well, here's the daily NASDAQ futures. Nice little consolidation box that it is traveling in, 3602 being the bottom of the consolidation, 3715 being 3715.50 or so being the top of the consolidation. A nice, 113-point move out there. So if it breaks one way or the other, that's the expected move that we should have. In the first show, I covered what was going on inside of the ES Mini, the S&P futures out here. The ES Mini is also in a consolidation, but it has already broken to the top side. So, you could see if, in fact, the bottom of this consolidation level holds here inside of the NASDAQ futures, price ought to move up to about the 37.15 level. You're trading at 36.29 right now. 36.29. That's about a 100-point move. That ought to help the ES Mini move up to its next level. That's if it can do that out there. So the key is watching what goes on inside of the NASDAQ. Let's go take a look. Speaking of the S&P 500, let's go ahead and pull that up on the screen out here. We'll take a look at this over a couple of different time frames. It is Wonderful Wednesday. As we take a look at this on Wednesday here, you're trading out at 1870. No real resistance inside of the ES Mini. Maybe this little doji candle. Let me go ahead and put my crosshair up here. And the doji, we've really had two you'd almost have to call them three dojis here. You get two in a row, but we had one that formed on March the 5th. Now, what is a doji candle? Look, I'm very specific because what I don't want anyone to do is to use candles the wrong way, because these candles really have meanings out here, and you can't be liberal with regard to what their meaning is or when a candle is a candle. Like a bullish engulfing is a bullish engulfing candle. It has very specific requirements, just as a doji does. In this case here, you had one on March the 5th out there. So just think, a narrow-bodied candle, it's not a doji candle. It's nothing more than really a spinning top. It doesn't have any meaning with regard to areas of resistance or support or out there. You can give it some other meanings for other trading type of reasons, but it just simply does not have that same meaning at resistance areas. And inside the S&P 500, as it was forming its high out here from March the 7th, you had a little doji candle. You also had one that had formed 2 sessions prior to that out there on March the 5th, right around the same price level. So it does say that the high inside the S&P 500 on March the 5th, that high being 1883.57, is very important, because a close above that says that the S&P 500 wants to move higher out here. Now, as we take a look at the S&P 500 out here, all that it did as it was moving down lower on March the 14th, number one, it couldn't get down to the 50-day exponential moving average. What it did do is it formed a little Rhodes momentum indicator signal out there. That said, if we could see a close above that high, and that's just a normal part of a market, and understanding the EKG of a market, that's really why I developed the system that I've developed out here. It's because what I realized was that as I took a look at the market, I broke the market down into what I'll call 4 characteristic styles. Those 4 characteristic styles being, number 1, momentum, speed, velocity. All of those being one level. You then also had what I called the energy, which really was dealing with, maybe the term verticality, if I were going to try to stick with all V's out there. What David White calls a power law vector indicator. That's another important element of a market. You also have volume, supply and demand. That is an aspect of the market. Then you have liquidity, or what might be volatility out there. So 4 very key distinctive areas. And there's indicators that can measure each of those. And that's really what's important, because not one indicator should be used in order to really, in my opinion, to be able to make where you should make your decisions about the marketplace out here. If I've learned any one thing about the market, and it's been many things, is that you need to have multiple systems out there for the different styles or the different conditions of the market that you're in. When a market is trending in one direction or another, you really want to understand what the momentum is. When you're traveling sideways out there, you really want to understand what volume is at the top and the bottom of that consolidation box. And that helps you as prices move up into those areas, because you can make a lot of money playing those consolidation ranges to the top and to the bottom, because they give you those measured moves out there. Look, in the case of the S&P 500, as we speak right now, we've had a nice move. Last time we saw the sellers have any kind of real input on a daily chart in the S&P 500, it was back on February 3rd, 2014. They created a nice Rhodes momentum indicator signal out here, and they gave us the buy signal that came in on February 7th out there. February 7th, nice little gap up, little rising window that took place out here. That was a nice sign of strength. Price moved up into the 50-day exponential moving average back then, and since has moved higher. These little red boxes on my screen, maybe they're not as clear if you're watching this on Tiger TV. No problem. Just go join the Tiger's Den. Try that out for free for 30 days out there. You can take a look at each of these charts in HD. Those red boxes tell you nothing but buyers in place. Buyers in control, buyers in control, buyers in control. What do we have? And you're looking for places to enter into a trade. You're waiting for the next momentum signal. You're waiting for this green candle, this green little signal to form out here. And we got the go ahead on that on March the 17th inside of the S&P 500. But what you want to always do when you're doing risk reward is you want to say, hey, where's my potential reward out here? Knowing that this doji candle was resistance out here, that may have not been enough for the reward to risk in order to be able to take the trade. So that's what the daily chart is communicating to us. If we take a look at the weekly chart out here for the S&P 500, so we're almost halfway through the week. what we did have, what it has formed. A little price relative strength divergent pattern as it was making its high back here. During that week of March 7th, we had a nice bearish reversal signal, bear sash candle. That took place on March 14th. In essence, that candle was erased out there because it did have no follow through to the downside. That means that the bears really didn't have a lot of, because that was a bearish reversal signal, they really didn't have, they weren't that enthused. They should have been enthused out there. It should have been able to move the markets higher. It says the bulls were being able to take back their position. So this here on a weekly basis, because a bear sash candle is a reversal signal. That says that high out here on March 7th, again, that high being 1883.57 is a significant high. You get above that, price is going to move higher. To where? You want to go ahead and you want to make sure that you're taking a look at expansions of swing points because we're in new, uncharted territory out there. Weekly basis, nice little hammer candle that formed as the lows were being made on the daily chart right around February 5th. Hey, the week of February 7th, nice big hammer candle. That says that if we do see a close ever below the, oops, I didn't mean to do that. If we see a close below that hammer candle, by the way, that price level is 1737.92. That would be extremely bearish out there. But as we speak right now on a weekly chart, and who's going to have more, who are going to give the priority to in taking a look at a trend? Are you going to say that the weekly is in control of the daily, or is the daily in control of the weekly? Yeah, the weekly is in control of the daily. And if somebody can find anything other than that bear sash candle, that little resistance up at the highs out there, if you can find something bearish about this chart pattern out here, give me a call, because I certainly don't see it out here. Let's take a look at the monthly chart. Let's switch over. Take a look at the monthly chart for the S&P 500. So is the monthly going to control the weekly, and the weekly controls the daily, and the daily controls the 120? Yeah, absolutely. Now, take a look at the monthly chart out here, and you can't find any type of resistance, because on the monthly chart, you're already above resistance. In fact, this says that support, old resistance becomes new support. What does that mean? That means that monthly bear sash candle, it took place in January, the high of 1850.84, you're trading 1871.48 right now. Guess what? On the monthly chart, prices above resistance. And we're almost done with the month. We've got the rest of today, you've got Thursday, Friday, and Monday in order to close out the month out there. What are the odds, what are the chances that the bears are really going to be able to push the market lower? I'm not seeing it. Other than that Euro-Japanese yen that just simply does nothing and just trades sideways out there, and that is the gorilla. That's the elephant, right? That's the elephant, or the canary in the coal mine out here. But I can tell you, as a coal miner's daughter, not that I'm one of those, out here on the monthly chart for the S&P 500, it is nothing but bullish. Now, let's go take a look at what arguably could be considered weak. Let's look at the composite. Let's go see what the message is of the composite on the monthly chart. Let's start off here with the composite, because this is the weak link out here, right? Is there anything weak about the monthly chart if you're watching this on Tiger TV? Absolutely not. In fact, take a look at this. You want to see how strong this is? Take a look at those red signals, those Rhodes momentum indicator signals out here. Nothing but red on the monthly basis. We saw price come down, tag the 8-period exponential moving average. That held as a support level. That was last month out here. That was February. The candle that's formed thus far, it's nothing more than hitting the pause button on your VCR. That's right. Nobody has VCRs anymore. It's like hitting the pause button on your digital DVR or something out there. That's called a bear harami. Is that a reversal signal? Absolutely not. In fact, it's really a candle that doesn't mean anything. I just simply have it out there to just for fun, just for S and giggles out there. In any event, let's go take a look at the weekly chart for the composite. Now, the weekly chart tells us a different story out here. The weekly chart does show significant reversal patterns. So this is saying, hey, hold on a minute here. Because what we have is we've got that nice price relative strength divergence. We saw price move higher on less relative strength, albeit just a tiny bit, and that was during the week of March 7th out there. What do we have the following week? We had that little bear sash candle. Is that a reversal? Yes. What do we have the next week? A doji candle, a little bit of ambivalence out there. What do we have right now? You got a bearish engulfing candle with all these things. So the bears on the weekly chart, they're really camped out inside the composite. But it hasn't been able to break through. It hasn't really been able to break on a weekly basis. Okay, we know where bears are. You know, when you are in a fight, don't you want to know where the enemy is? I mean, if you knew exactly where the enemy was camped out, how easy would it be for you to be able to win the battle? how easy would it be for you to be able to make trading decisions? That's really what the candlesticks here are providing us. It is helping us to understand where that resistance is. And why is that important? Because, folks, if you see it close above those resistance areas, old resistance becomes what? That's right. Old resistance becomes new support. So this is the area to be paying attention to. The price point out here is going to be the March 7th high. That is the level where the bulls will have changed the polarity, where the bulls will have overtaken the bears right now. That high is 43.7171 out there. But is this looking, do the bears have control here on a weekly basis? No. All they've done is they've drawn a line in the sand out here, but they have not been able to turn the market lower. Just been able to identify areas of resistance out here. That's what's going on inside the weekly chart. How about the daily chart here for the NASDAQ Composite? The daily chart shows us that price moved down and the bulls step in and they defended what? They defended the 50-day exponential moving average. That's the black line going across my screen out here. That level's been tested. Now, look, the daily chart is saying, hey, you've got some serious problems out here. The bears are still in control. In order for the bulls to really get control, in order for the bulls to tell us they've got their, and maybe the bulls are just getting the cavalry together. Maybe that's all they're really doing out here. They're just waiting for the troops to rush in. Until they do, they're going to go defend that 50-day exponential moving average, which is 42.26 at this stage here. We'll know if the cavalry's arrived right now. If we were to see it close about 42.75, if we do, the bears ought to be saying, hey, we better make sure that we've got our troops out there. But at this stage, on the daily charts out here, yeah, you've got to give the bears credit where credit is due, but we know where the bulls are hanging out. They are defending the 50-day exponential moving average. So if we see it close below that, yes, that would say that the bears are going to try to advance the ball. They're going to try to get down below the swing point that was created 2 trading sessions ago, that low being 41.9061. So that's what's going on inside of the composite. If we take a look at what's going on inside the NYSE, let's go ahead and rip that apart, the New York Stock Exchange. In fact, right now, if we take a look at the NYSE, what do we have here for net advancing issues? Not a lot. You got 268, so another ambivalent day here. Price-wise, though, you're still in a nice bullish mode out here, and this is the daily chart. So the daily chart says, hey, we had some resistance out here, this little bear sash candle. That was at a price level here, which we're watching on the NYSE, that says a little bit of resistance at 10,449.50. You're trading at 10,447.75. So the NYSE trying to get some legs out here, trying to get above that resistance level, and if it does, it's likely headed up to its highs out here, which were from the date of March the 7th. What does the NYSE really need to do today? Good question. I didn't write that down. So let me go ahead. Let me see if I've got the tab spreadsheet open. No, I didn't have the spreadsheet open. I'm going to have to do that here and pause. There we go. The number needed today, 1308. You see 1308 or more net advancing issues, and the bulls will have taken charge inside of the New York Stock Exchange. So that's what's going on the daily basis. What's the weekly look like here? Again, we're mid-stroke here in the week, but let's go take a look at what's the weekly show. The weekly here in the NYSE, yeah, guess what? It shows that price was moving higher on less relative strength. You never like to see that out here. You did have a bearish reversal signal. That took place here the week of March 14th. Last week says, guess what? That old bear sash candle was somewhat dismantled out there, so it's not as bearish. The bears had the opportunity to push prices lower. They were not able to do that. What's that really mean? It says the New York Stock Exchange wants to go ahead and make a run for the highs out there. The highs, again, being that price level of 10,550.24. Right now, we got the Dow up 28, S&P up 5. We'll be right back, folks.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of any winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. Dow up 18. S&P up 3. Russell 2000, the weak link out here. So let's go check in on the Russell 2000. It's off 4 points right now. Trading out at 1173. 1173 running right into the 8-day exponential moving average out here. Now, we've got the weekly chart on my screen up here. We'll go take a look at the weekly, the monthly, and the daily, just as we were looking at the other indexes out here. Now, what is the Russell 2000 have? It's established a bearish reversal pattern out here. It's got the price relative strength divergent pattern on a weekly chart out here. That means it made a higher high, did it on less relative strength. It was making its high back here the week ended March the 7th. What did it do the following week? Not much. Didn't really create a reversal candle out here. Moved a little bit lower. What do we have last week? Well, last week we had a nice shooting star. Now, a shooting star is a one candle session reversal. It's the opposite of the hammer. A shooting star takes place at the highs. A hammer takes place at the lows out here. That says that the high from last week, which is 1208.10, that's your resistance area. You see it close above that? That says price is going to go ahead and move higher, right? On a hammer candle, if you close below the hammer, if you're long, you're wrong. And if you close above a shooting star, If you are long, you're right. If you're short, you're wrong, right? We got to come up with a rhyme for that one, too. Now, what do we see here? You got a shooting star, and this week, what are we getting? We're getting some additional follow-through as we speak right now to the downside. That's the type of confirmation that you're looking for. Today also happens to be a bearish engulfing candle. That says that high here from last week is very important out there. Now, what it hasn't done is really hasn't broken down. It needs to close below 1164 by the end of the week in order to start to make if you were bullish, in order to make the bulls say, really something to think about. The key area on the weekly chart inside of each of these indexes, well, in the case of the Russell 2000, it's the hammer candle that formed February 7th. And that low is really important. That's at 10,000. That's at 1082.70 out there. So that's what the weekly chart is showing. Let's take a look at what the daily chart for the Russell 2000 is showing out here. The daily chart is showing that it's slipping into bearish hands out here. You're seeing really a consolidation that is formed here. You can see this one lower threshold, what I call my Rhodes momentum indicator signal out here that had formed back on the week of March 13th. We saw another one that's forming here today. But until price was to break below that, I'd say have to break below the low here of Monday, which is at 1169.50, and really it needs to break below the 50-day exponential moving average, 1168.20. And I'm not saying that it can't do it. It can do anything it wants to. And right now on the daily basis, I can see where the bears certainly have control of the market out here. But support, looks like support ought to be found right around the 1168 area, and that's what's going on inside the Russell 2000. If I take a look at the Russell 2000 futures contract and I switch over into the 120-minute chart out here, let me reload my screen so you can see. You got to take a look at it. Keep things in perspective with regard to the time frame that you are trading on. If you're an intraday trader, then you want to be paying attention to the 120-minute chart out here. What did the 120-minute chart show? Back on the trading, let me get my crosshair out here. What did it show back on the trading session? Has made a high here at 12 noon on March the 21st out there. Price relative strength divergence. What did it have? Follow through on the next candle. Or what it had a bearish engulfing candle is what I should say, and then follow through on the next candle. That is really what you want to see. If you're bearish, you want to see that on the daily, on the weekly. Depends on the time frame it is that you are trading out there. You most certainly would want to see that on monthly. Look, trends are going to change on a 120-minute chart before they change on a daily. They're going to change on the daily before the weekly, and the weekly before the monthly. But you still have to put things in perspective. Always put things in perspective out there. Make sure you know what's going on up top and below, and if you do that, you'll be able to make great trading decisions. Folks, it is Wonderful Wednesday. Thanks so much for joining me. Stay tuned. Our man Basil Chapman is up next. Then we got Larry Pesavento, Daryl Martin, David White, the Tom O'Brien Show from 4 to 6. Have a great Wednesday, folks. Look forward to seeing you tomorrow morning.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.